You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
I'm Bill Powers. It's Mining Stock Education. Joining me is my friend David Erfle from JuniorMinerJunkie.com. David, welcome back onto the show. When we spoke a month ago, it was right around the monthly CPI release. And here we are talking just after the 9.1% number is released. And of course, gold sells off. Inflation's high and gold sells off right away. It sprung right back, but it doesn't make sense. But gold hasn't made sense to me for quite some time, honestly. But what is your analysis of what's going on here?
Yeah, well, considering what the gold price did, what the silver price did, what the miners did going into this CPI report, how extreme oversold everything was, it wasn't going to take much to get a bounce back. And when the report came out, which was much worse than expected, the gold price immediately started to sell down towards 1,700. And you've had every bear out there and quite a few bulls that have turned bears saying that, oh, gold's going to go to 1,675. It's obvious. Well, when you have that many people on one side of the boat in an extreme oversold situation, you're going to get a bounce. And that's exactly what happened today. And also I think a big reason for the bounce was, we had a short covering rally. The shorts, have made quite a bit of money going into this. And like I said, being extreme oversold. So the gold price reversed about $35, $40, and the miners reversed as well. But if you take a look at the number, basically you've got a Federal Reserve that was telling us for months that inflation was transitory, and it wasn't going to be a problem. We can leave rates, at 0 to 0.25, and now that inflation they're obviously way behind the curve on inflation now. Now they're telling us that we can raise rates without causing a recession.
Is that still their talking point?
That's still one of their talking points. We could do a soft landing, even though the Atlanta Federal Reserve has come out and already said that they're expecting a negative 1.9% Q2 GDP rate after a negative 1.6% in the first quarter. And basic economic theory is what they practice is 2 consecutive quarters of negative growth is a recession. So basically, we're already in a recession. But the $64 billion question out there right now is investors want to know, what's it going to take to bring prices down? How much demand destruction is the Federal Reserve and other central banks willing to sacrifice? I mean, Canada just raised their rates today a full percentage point. So how much are they willing to sacrifice? How much of a recession are they willing to put us in to bring down inflation? That's A. And B, the inflation that's happening is not based on anything the Fed can control. We've already printed all this money. We've already doubled the money supply from 4 trillion. They doubled their balance sheet, more than doubled their balance sheet from 4 trillion to 8 trillion in less than a year. So they can't do anything about that. They can't do anything about the supply chain issues. They can't do anything about the Russia-Ukraine war, which continues to go on, and it continues to cause this inflation. They can't do anything about China locking down economies and causing these supply chain issues. When you shut down the world's largest port, completely, for several weeks, you can't just start it back up again and say everything's going to be hunky-dory. And you can't do that with economies either. You can't do that. That's basically what they've tried to do. So the Fed cannot control where most of the inflation is coming from, which is supply chain issues. So it's continuing to go higher. And what happened the last time we were in this situation like this was back in the 70s, where we had stagflation, right? We had rising inflation and we had a stagnant economy. Well, we're pretty much now, technically in a recession, and we've got inflation that continues to go higher. The gold price was rising along with their interest rates hikes. So far, that hasn't been the case. because people are expecting the Federal Reserve to get on top of this, you know. So after the non-farm payrolls report came out, last week, and it was better than expected, and wage growth was rising a bit, but wages are still at a negative 4.5%. So, when is that going to start sinking in and making a difference? I don't know. But as far as the gold price is concerned, it got extreme oversold on a weekly basis as well as a daily basis. The miners also extreme oversold on a weekly basis as well as a daily basis. So I was expecting some sort of a bounce this week. We're getting some sort of a bounce right now, but we need to have follow through, right? So what we're seeing today is short covering. We need to see some value-based investors coming in and buying on top of this short covering into the weekend.
Yeah, that's a great insight, Dave. So how are you playing the miners then? Last time we talked, I think you were 30-ish% cash, and you said that's the good position to be in based on your experience. You want to have core positions. You want to have a large cash position so that even if it drops, you can average in, because nobody knows the bottom for 100%. But what are your current thoughts a month after we last spoke on how you're discerning a bottom here?
Yeah, I got up to a 50% cash position about a month ago, and I deployed some of it last week. And right now I'm still about 35% cash. So, like I said, you want to be in situations like this, you want to be in a position to root for either outcome, either a short-term bottom or, hey, look, these things could go a lot lower and I've got all this cash to buy more. So, because you don't want to be in a position where you have to make emotional decisions. And that's what this sector loves to put people into.
And buying tranches,
into a position
right?
to make an emotion. Yes, exactly. So, I've still got, all my core positions, and I've got room to add more. I added a couple new ones last week. So yeah, I'm going to wait to see if certain levels are breached before I add more. We need to see, like I said, we need to see follow through here. It looks like today we're speaking at the market's going to close in about an hour and a half. We've got a large white candle in the GDX and the GDXJ. We're seeing the miners show relative strength to the stock market this morning. One day. What I want to see is 3 solid white candles the rest of the week, and the GDX close above 30 and the GDXJ close above 35. I'll feel more comfortable about this at least being a short-term bottom in the mining sector.
Dave, I wanted to ask you about the whole idea of if you're invested in a mine developer and there's problems, sell immediately and don't look back. And that wisdom seems to be true when I look like Geopacific in Papua New Guinea, Pure Gold in Canada, Alexco, Arcana Silver, and now Rio2 in Chile. So, what are your thoughts and your experience? If you're in a mine developer, it goes wrong, just sell, because the likelihood is it's going to go lower, the share price.
Well, Rio2 is a great example. As you know, you're a subscriber. That was one of my top 10 stocks. The company had already began to build their very large heap leach Phoenix gold project in Chile. They were just waiting to get the environmental permit. And I assumed, and the company had assumed, that they'd done everything that the government and the regional government asked of them as far as the flora and fauna issues around the mine. And then all of a sudden, right about a week before the permit was expected to be issued, the regional environmental association recommended that the government turn it down. And as soon as I read that, I put out a note to my subscribers, as you know, to sell it. Because if it's a regional issue, the government's likely either going to disapprove it outright, or they're going to disapprove it with a stipulation that, hey, you have to do a few more things before we give you this permit. The same examples. The same thing happened to Marathon, and the same thing happened to Sabina in Canada. Sabina eventually got their permit, and Marathon, it looks like they're going to get theirs. This but this is Chile. So as soon as I read that, I went, you know what, we got to sell this now, and then we'll wait to see what happens with the decision, and then maybe we can get back in cheaper depending on what the decision was. And the decision was an outright disapproval, and the stock, of course, completely cratered. And now, they've made all these commitments for supplies. They've already started to build the project. So this stock is going to be dead money for quite a while if they eventually get permit. So, I basically told my subscribers, this was the only company that I had in the portfolio that was de-risking a project in Chile. And I basically said, look, I mean, Chile's off my list now, because, it looks to me that the company did everything that they were asked to do. And then the government, the regional area came around and said, you know what, we don't want this mine, even though you've done everything that we've asked you to do. My personal opinion, it might have been a water issue, because, water is very scarce in the area, and they're going to have to have like 70 or 75 trucks go through the area every day to truck water to the project.
So they were looking for a reason, a cover story to deny.
They're just using the flora and the flora fauna issue as a cover. Yeah, that's just my guess. I don't know, but yes, I mean, the smart move was to just sell as soon as you found out the news, because the stocks, sold off. It was cut in half again from where I sold, and I recommended my subscribers to sell. So yeah, this is why you need to constantly be on your computer in the morning, when you're expecting a major decision that's going to affect your stock. And that's what I do. And that's why I try to keep on top of everything for my subscribers as much as I possibly can, because these things can come out of left field in any company, no matter how fantastic the project looks, no matter how great the jurisdiction was. I mean, Chile used to be a top tier jurisdiction, just a couple of years ago. So you just have to keep on top of these things. And this is one of the challenges of being in this sector.
So Dave, do you think that the horrible sentiment we're experiencing in the sector now, it's kind of like amplified by all of these mine development failures, right? The gold price, lack of funds in the sector, and then you add on 80% losers in our portfolio. And, the sentiment is the worst I've seen. What your thoughts on sentiment?
That's late 2015, early 2016. Yeah, I mean, sure, the sentiment was bad in March of 2020, but that happened in 4 weeks.
But how many mines were being built in 2015? There weren't as many mines, right?
Exactly.
In 20. So, but now you get all these mine attempts to come into production, and then they fail. It kind of adds to the sentiment of, why should I even waste my time with the juniors?
It does. Yeah, you've got the gold price waffling between $1,700 and $2,000 for the past 2 years. And inflation is skyrocketed. So all these projects, all these CapEx, CapExes for all these projects that were estimated to be a certain amount, 6 months before the inflation, all of a sudden they're 20, 30, 35, 40% higher. I mean, look at what happened to Argonaut. I mean, their CapEx was, they guesstimated their CapEx way wrong twice. and they've recently have had to raise money they had to basically double their share count, raise enough money to finish the project, and that stock has completely been decimated, and their share structure is completely blown out now. It even cost the founder of the company his job. So these things are happening in the sector at a time where the gold price is attempting to get out of the shadow of a parabolic US dollar while inflation continues to climb. So yeah, I mean, investors have fled this sector in droves. So the move you saw today was basically, like I said, a short covering move for now. But so we need to see some investors coming into the sector on top of this short covering, be more to be more confident that we've at least seen a short-term bottom. I'm leaning towards that direction, but I'm keeping my cash safe just in case, we have more selling, because, we have, after right after this CPI report came out, Bill, right before it, the market was pricing in a 92% chance of a 75 basis point rate hike, an 8% chance of a 100 basis point rate hike. As I just turned on the this link for this interview, the 1% chance of a rate hike has risen to 79%. So the market's already pricing in a 1 basis point rate hike. Now that the Fed in their nimble mode can come out and say, even though we were expecting to raise 75 basis points, we're going to raise a full basis point. That happened during the last meeting. Everybody was expecting a half point rate hike, and then 2 days before the meeting, Feds, all these Fed heads started talking. Looks like we're going to have to raise 75 basis points. So, right after the CPI, now we're going to have all these Fed governors come out and talking. And the biggest hawks like Bostic and Waller, they're going to be coming out and they're going to say, well, it looks like we're going to have to raise a full basis point. So, but at what point does all that debt is that's the elephant in the room that nobody's really talking about, because even at 2% Fed funds rate, just the interest on the debt is $1 trillion. Which is already a cumulative interest. 70% of the national debt is cumulative interest payments. So, really going to be interesting how the market's going to take this. It's waffling right now. It looks like it's teetering on taking another plunge lower, the stock market. I'm still eyeing 3,200 on the S&P as a possible target. And, if the stock market starts to move down towards there, this is an election year. So, is the Fed going to continue to be, all out hawkish when they understand that, they can't really, that most of this inflation they can't control. So, they're going to have to pivot. They're going to have to at least back off from rate hikes pretty soon, I think. I don't think they can raise too much, because the next meeting after this is not until September. And, a lot can happen in the stock market until then. So it's going to be really interesting how they're going to try to handle this. They didn't handle the transitory issue very well, and I don't think they're going to handle we're going to be able to do this with a soft, into a soft landing and avoid a recession issue. So let's see how they're going to be able to do it. But in the meantime, gold continues to hang around. We've had copper go from $5 a pound all the way down to $3.30 a pound in like 4 months, right? It's
on
now
recession fears,
below,
right?
Right. It's now trading below its 200-week moving average after, skyrocketing. So the gold price hasn't even corrected down to its 200-week moving average yet. That's down at 1652. So there's really super strong support, obviously, at 1675, 1700. So what's it going to take, to get the gold price down there? I don't think it could do it, but you never say never in this sector, and that's what my cash is sitting on the sidelines, waiting for. Is this going to happen? I don't know.
Mm-hmm. I'd like to get your thoughts before you go on one more acquisition. So Hecla's buying Alexco. Alexco is a company.
Put them out of their misery. Yeah.
Again, another failed mine developer, underground, narrow vein mine developer, had all sorts of problems, then ran out of money. And so they needed somebody with money to come in and help them. And Hecla's buying out the stream and buying the company. What are the takeaway lessons in this one?
Oh man, that's another one I'm intimately familiar with. That's Alexco has been the little engine that could for so long. And by the way,
it was a darling too, Dave, with the market, right? Yeah,
it was. I made so much money on that stock during the 2008 run up into 2011. I did really, really well. It had that U.S. listing. It had that tight share structure. had that Amex list, US Amex listing, tight share structure, sure, they had to make the devil, the deal with the devil, with Wheaton to get that mine, to get that mill built. But it's funny you mentioned, the stream, because who made out the best on this deal?
Wheaton.
Yeah, they made out the best. They got $128 million payout for that stream. But yeah, I mean, Alexco was hit with, I think the biggest culprit was the draconian COVID measures in the Yukon. That really hindered them getting that mill up and running in a timely fashion. Of course, building the mill on top of a silver deposit didn't help.
So Dave, if I could interject on that point,
sure.
When we're saying because one of the themes in this interview obviously is the failed mine developers. We should note that this is all during that crazy period of COVID, supply chain disruption. If one person gets sick, everybody goes home and you got to pay them all. So to be fair to the companies, they've had to deal with a lot more than in normal times.
Absolutely. That's what I'm saying. You had supply chain. It was a threefold issue: supply chain issues, draconian COVID restrictions in Yukon, and the silver price tanking while they're trying to get their mill into commercial production. They announced that they were going to have to raise money for the fourth time this year, and that was it. That's what did it, and that's what put the company on the sale block. And Hecla came in and swooped in, which is what Hecla does. They did the same thing with their projects. I forget the name of the company in Montana. Hecla is now basically the new silver standard. They've got all these projects in North America that's got all this silver in the ground. So they've got a lot of silver in the ground in North America.
America's Gold and Silver, another failed developer I just thought of too, right?
Another one I'm intimately familiar with. Fortunately, with Alexco, I got out somewhat in time. I lost a little bit of money this go around. I think I got out at $1.20. And America's Gold and Silver is another one. That was another one that had everything going for it. But the Relief Canyon startup was a huge problem. They could never get that on track. Then the Mexico issues. That blockade, and that mine was shut down for a very long time. And then by the time they opened it up, guess what? The silver price is $21 an ounce. So yeah, I mean, and they had an Amex listing too, and had a tight share structure at one point. And turns out their best project, the Galena mine, they end up giving them, they end up selling 40% of it to Sprott. So yeah, I mean, these are all lessons that people should take to heart, in this sector, because anything can happen. There's so many things that can go wrong, but when they go right, these things move awfully far, awfully fast, and they can move awfully far, awfully fast in the opposite direction when things go wrong. So you really have to stay on top of it, and that's what I try to do for my subscribers.
Yep, and just to point out the positive, you went 30-fold on First Majestic Silver in the last cycle for a growing silver developer producer, right?
Yes,
$1 a share to $30 a share, right?
Yes, and Wheaton. Those were my two biggest winners during the last bull market. Yes.
So that's why we do this.
It only takes one or two to in your portfolio to make you look like a genius.
Yep. I have a number of 80% losses on Explorers, but then the ones that I put a lot of money in and did well in, 5 to 10 baggers last year, you sleep well because those cover your losses. You just understand you're going to have those 80, 70%.
It's just cost of doing business on the other ones. Yes.
Yeah.
Absolutely.
Well, Dave, your website is Junior Miner Junkie with a Y. Still openings for new subscribers over there?
Oh, plenty. Come on over. We got plenty of room.
Yeah. By the time gold hits 2,300, though, maybe not, right?
Maybe not.
Yeah.
I mean, if you could let me know when that's going to happen, I'd appreciate it.
No, I look to you. Well, Dave, thanks for coming on the show, and we'll be touching base in about a month with you.
Absolutely. Always great to talk to you. And thanks again for having me on. It's always a pleasure. And best of luck to everybody out there. it's really close to turning around. This might be the beginning, but I think it's really close because this is the worst sentiment I've seen in quite a while.